Stop buying dividend stocks until you know these three metrics. The number one matrix that people use when it comes to buying dividend stocks is dividend yield. Now, why is that so? Because if let's say a company announces a dividend, the company's dividend will count out against the stock price that you have to pay. And that works out to be your dividend yield percentage. If let's say you buy the company stock worth $1,000 and the total dividends you receive is $100, that works out to be a 10% dividend yield. So the higher the dividend yield, the higher your investment on returns. So the next metric is known as payout ratio. So a payout ratio is based on how much the company declares as dividend against the profits that the company has. So if the payout ratio is 100%, it means that the company will pay 100% of all the profits that they have. So if the company constantly have a high payout ratio, it means that this company like to reward shareholders or give the value back to shareholders in the form of dividend. But the question is a high payout ratio really that sustainable? Because if the company pays 100% of all their money, then how is the company able to sustain for their R&D or is it able to sustain for competition? And how is the company able to improve their services or products? So how can someone know whether a 80%, 90% or 100% payout ratio is sustainable? Now what we look at next is what we call the free cash flow. So free cash flow is how much the company has as a float that allows the company to do R&D, do share buyback or even acquisition. Because you must know the underlying of all stocks is actually a business. And a business requires to function well against competition by doing all these. Now here's an example. If you look at StarHub, and if you look at the trend, the payout ratio now hits above 100%. What this means is that StarHub has to borrow money to give out more dividends. So here are the three metrics. Number one, the dividend yield. Number two, the payout ratio. And number three, check the dividends against the free cash flow. So where can you get all this information? If you go to physical.ai, under the first page on overview, you can actually see the dividend yield. And at the same time, it will tell you how much is the payout ratio. As for the cash flow, you have to head to the financial statements under the cash flow, all the way to the bottom for cash flow for financing and compare it against the free cash. Now let me know if this is useful to you.